Good morning, everyone. I am Lauren Thompson. I'm the technical assistance lead at JARI. Today we have Lindsey Bennett with us. She is from KIZ Resources, and she's going to be covering a variety of different tax credit programs that are available. Before we get started, I'd just like to say that if you have questions throughout, feel free to type them in the chat. I'll keep an eye on the chat if anybody has anything, or you can unmute yourself and just ask to create some conversation. We'd like this to be as interactive as possible. Before we get started, if we could just go around, I know it's kind of difficult to do on Zoom sometimes. If everybody could just introduce themselves and let us know where they're from, that way when Lindsey's going over these tax credits, she might be able to think in her mind like what could be for specific people. That would be beneficial.
Can you hear me?
Yes.
Okay, hi, I'm Jacinda Fondelier. My husband and I own Ryan's Artisan Goods. It's a cafe in Cambria City of Johnstown.
I'm Kimberly. I am a serialpreneur, so I could tell you a handful of businesses that I own and a handful of businesses that my husband owns. We're in Southern Blair at Blue Knob All Seasons Resort. Happy to be here.
Hi, I'm Andy Vezic.
Guess we can go down the line. Jacob, do you want to introduce yourself?
Hi, I'm Jacob Boer. I'm the owner of Financial Focus. I'm located down in Latrobe area, but I actually work for Sorcery as well in a part-time position. They're located out of Evansburg.
Kathy?
Hi, I'm Kathy Morrell, and I work with the Learning Lamp. We have childcare centers in 5 to 6 counties. So, yeah.
And Teresa, she just got on. I just let her in.
I'm Teresa Marafino. I'm from Jennerstown, PA, and I own Green Gables Restaurant and Huddleston Court.
Okay. And then we also have Brian Young. He is at our JARI Center location, and Michelle Clapper, our VP of Economic Development, and Blake Flegel, our entrepreneurial coach, is on here as also. So at this time, I'm going to mute myself, Lindsey, but it is your presentation, so go ahead.
Awesome. I'm going to go ahead and share my screen here then. So you don't have to just look at my face the whole time that I'm talking, but please ask questions along the way. What we're talking about today for the most part is Pennsylvania transferable tax credits, but there are some other programs that are not transferable that we will get into. As soon as I let my slide advance, there we go. This is the alphabet soup of programs that are available in Pennsylvania. A large chunk of these are the transferable type of tax credits. So I'll get into what that means exactly. The goal today is not to make you guys experts. We're going to go over a lot of different programs, but just to kind of have this kind of page in your mind that as you're doing things within your business, you think, oh, you know what, I'm making a change here. I'm doing something different. There might be a program to help me get funding to help with this. So just to kind of help you to think so you can reach out to the right type of resources to see if you're eligible for certain things. Our company started back in 2006 when the Keystone Innovation Zone Program got started. And that was kind of where we were at. We grew from an accounting firm and spun out the company from that accounting firm to KIZ Resources to help companies kind of navigate these incentives. And we grew from the Keystone Innovation Zone to all of the various programs, and we do assist with some other types of investment funding, payroll type service programs, and HR related activities. So first and foremost, what is a tax credit? Oh, hold on, my child is interrupting.
Downstairs.
I know.
And I watched.
She's getting this. Okay, very good. But I have to do this soon. Okay, thank you. Sorry.
Is that amazing?
It's amazing. It's her first loose tooth, everyone. That's pretty exciting. That's Annika. Okay. No. Okay, you have to go. Hold on just 1 second. Okay. All right. So what is a tax credit? A tax credit is different than a tax deduction. So a tax deduction is something that lowers your overall taxable income. A tax credit is a dollar for dollar reduction in the actual tax liability that you owe. So it actually covers whatever that tax liability is. And then if you had paid in cash, you can get a refund from the state. The way Pennsylvania has set up the majority of their programs, they actually have them be transferable. So if you don't have PA tax liability, you can actually use what you have for PA liability and then sell whatever's left and get cash for it. There's a few rules to how you pass through a credit. So some companies that are set up as an LLC or an S Corp, the taxes all flow through to the owners. So there's a few rules with how that happens, but you can use the credits at the owner level in personal income tax. And we can go over that if anybody would have really specific questions. I am going to really quickly pause. I see there's 2 things in the chat. If they're just general things, that's fine. I'm going to close my door so block out some of the other children noise. Hold on just 1 second. Sorry about that. My husband is home today and is supposed to be keeping them upstairs. So, but anyways, like I was saying, what most people do with these credits is sell them for cash. So it's kind of like a grant in disguise with just this extra step. So the first program we're going to talk about is the Keystone Innovation Zone Program. The KIZ was established back in 2003 or 2004 during Governor Rendell's administration. And what it was designed to do was to help stop the brain drain. So we have really great colleges and universities, people are getting degrees, and then they're traveling out of state to find jobs. So what they did was they created this entrepreneurial ecosystem by establishing these 29 zones. There's now 28 zones because 2 combined throughout the state that are strategically designed around colleges and universities with great economic development partners like JARI to help give entrepreneurs the support they need within their first 8 years of business. The biggest benefit, besides all of that support that you're getting from the local environment that's created, is the tax credit itself. The tax credit, it can be up to $100,000 per year that you qualify until the company turns 8. So most companies will receive about 5 or 6 tax credits of up to $100,000. So it can be significant dollars into a startup company. The credit is calculated as 50% of your increase in gross revenue. Profit and loss does not matter. So you're just looking at your gross sales number from one year to the next. There's $15 million available in these tax credits each year. This is something that we would like to see get an increase eventually here. This past budget cycle, a few other programs did see an increase, including the research and development tax credit, which we're going to talk about. But we'd really like to see the KIZ program start to get an increase as well. It's definitely an oversubscribed program in most fiscal year cycles. Last year being an exception, but that again was also 2020 was the COVID year when a lot of companies were shut down for a period of time. So you have to have an increase to qualify for the credit. There are 4 main eligibility requirements to qualify for this program. The first one is the company has to be in operation for less than 8 years, and that's from your EIN start date. So if you got your EIN and just sat on it for 2 years and did nothing with it, unfortunately, you probably wasted 2 years of your eligibility in this program. But it goes back to your start date of that. You have to be physically located within the boundaries of a KIZ zone. Again, there's 28 of them, and the next screen I'll have some more information about the Johnstown zone. Then the 4th one is you have to be operating within a targeted industry. Those industries are advanced or diversified manufacturing. That can be anything from like food science type manufacturing, breweries qualify, to any sort of widget, gadget, any sort of manufacturing. The other ones are life sciences or biosciences, high technology, which is like the defense type sectors or nanotechnology sectors. And then also business services, which would be some of like your SEO, web development, app development type things, not business services in that of like an accounting firm or an attorney's office, but somebody that's creating something that's their unique IP and offering it for licensing and not just off the shelf kind of resale, retail or wholesale. The last component is the trickiest one to kind of define. The program requires that a company have their own intellectual property. So that innovative component can be many different things. It's kind of like your secret sauce of what you are doing that's different from your competitors, what kind of sets you apart. It can be something that's a patent or patentable, but you don't have to have a patent. It could be, that you have a trademark, whatever sets you apart to earn that trademark is good support. Or it can just be a trade secret, something that you're doing differently internally, or something that you've developed. So as I said, there are 28 zones. This is just a little bit of the maps for the greater Johnstown KIZ, which encompasses parts of Somerset and Cambria counties. There is a really great map on JARI's website at that address there, jari.com/financing incentives, Keystone Innovation Zone. And then if you are not located in that region and wanted to see if and where the zone is in your county, the second site there is DCED's website, and they have the list of all the coordinator locations and who the coordinator is for each zone, but each zone themselves is responsible for maintaining their maps. So you have to actually reach out to that zone or reach out to us, and we can help direct you to the right spaces of where the zone is located. So the overall timeline for a KIZ company is you have a base year where you're getting established. So maybe you started your EIN in June of 2020 and moved into a KIZ zone in downtown Johnstown in November of 2020. At that time, you would have gotten connected with Blake, who is the coordinator there for Johnstown, and he would have got you set up in the zone. If you didn't at that time, you can do that anytime after, and he'll get you set up. You just have to prove that you were located within the zone during some portion of that period. Your year two then is your comparable year. So they're looking at increases in gross revenue. So year one, whatever portion you're in the zone for, that's your base year. It doesn't have to be the full calendar year. Then year two, your increase year. And then you finally apply for the tax credit itself in year three. Year three will compare your second year's revenue minus your first year's revenue times 50%. So if you've increased by $50,000, it's $25,000 tax credit up to $100,000 in tax credits total. The application for this year is going to be opening around September 15th, and it will be due December 1st. December 1st is a hard and fast deadline each year for these applications to go in. It's done online through DCED's electronic single application for assistance, and it is time stamped when it goes in. So you can't put it in at like 12:02 on the December 16th, 12:02 a.m. Once it's past that December 15th or December 1st date, excuse me, they can do nothing. It's in the legislation that you have to have it in by the deadline. We can assist with that online app. DCED uses that ESA for almost every single one of their programs. So a lot of the questions don't seem to make sense for just asking for a tax credit that's based on gross revenues. You don't have a specific project that you need to describe in detail what you're doing and what your budget's like or anything like that. So we can assist you with that application process and go through everything. The biggest component is that you do have to upload your tax returns. So if you're applying this year in 2022, you have to have a filed 2021 federal and Pennsylvania tax return and a filed federal and Pennsylvania 2020 tax return to provide. That's what they use to calculate the credit. After that deadline, the state will review everything and make sure that everything's good to go to approve your credit. and they will issue those award letters on May 1st, on or around May 1st, I should say. They'll have all the determinations done by May 1st, but the letters might not be received until a week or two later if they're coming by mail. The effective date of that credit goes back to December 15th of the year you applied. So even though you're not getting the credit until after tax season, essentially, you can still use the credit on your 2022 tax return that's being filed if you need to use the credits. So after you receive your credit award, you have the option then to use the credit at your company level, pass it through to owners, or sell it for cash. There are opportunities too for it to carry forward. You can use it over 5 total tax periods if you have or think you're going to have more tax due down the road and you're not going to generate more credits. You can also carry them forward. This is just a little example. I'm not going to go into a whole lot of detail of it, but just I kind of went through a scenario before. The slides will be available after, so if you ever want to kind of reference this, but this is just how a company, that went through their application process, what type of dollars they saw from growing, from 0 to 200,000 in revenue to 300,000 in revenue, and what that meant for some tax credits. You can see they received 100,000 the first year, 50,000 the second year that they were in the program. And then if their revenue went down, that's okay. You skip that year and you come back right back into the program. The other key thing that KIZ companies need to do is do this biannual, so twice a year reporting on KIZ Force. It's a Salesforce application, and it has you log in every January and every July and just report kind of a snapshot of your company from the last 6 months, what your gross sales were, what your payroll was, total payroll, if you added any new employees. Specifically, if any of those new employees were recent college graduates, they want to know if the program is working like it's supposed to. What they do with that information is they aggregate it for everybody within a region and report it to the legislators so that they can say, in Cambria and Somerset County, in the last 6 months, 5 jobs were created. Total payroll was, 350,000. That's obviously probably a low number really for the KIZ zone, but just give you an idea of the legislators that the program is working. You do have to maintain physical property within the zone. So you can't just have a mailbox that's in the zone and pretend that you're actually having activity there. You do need to have real tangible property in the zone that you are working from, or some employees are working from. Since COVID started, there's a lot of people are still working from home. As you can see, I'm doing the presentation from home today instead of going into my office. That is continuing, of course, and a lot of employees want to continue to be able to have that flexibility to work from home. The state is currently working on issuing some guidance as far as how much, because the intent of the program is to have people use space. The research shows that companies working in an office setting in their early years typically thrive more than companies that are just working alone in their basements or working alone at home. So they really don't want to get away from that, but they also want to be cognizant of what's going on in the world and how people are working. So there will be written guidance coming out on that. But for the most part, what they want to see is, people using the zone. It can still be a hybrid schedule, but people using the office space in some sort of consistent way, so that you're meeting with your other employees, bouncing ideas off of other companies that share office space, and continue to grow. So since 2018, the tax credits that have been awarded, they've awarded $15 million each year. Although last year in 2021, it was just under 15 million. It was the first time in quite a while that we didn't quite reach that threshold. And in total, the greater Johnstown area had received just under $500,000 in credits that went to companies. So it's real dollars that are helping companies to grow. So on average, you're getting the area is getting a little over $100,000 or so, $115,000 or so each year into the companies that are applying. If for some reason they do have more credits than that 15 million, what the state does is they prorate it equally. So everybody gets an equal share of what they had asked for. That way you don't have to, there's no winners or losers. If you qualify for the program, you provided all the information, you get your equal share. During the application process, I did mention you do have to file a tax return. If you are a fiscal year filer, so maybe your fiscal year ends July 31st, your tax return would then be due by October 15th. You could go on extension for 3 to 6 more months or whatever, but the state's rules are if your filing deadline is before December 1st, you need to have that tax return filed. Not an extension deadline, just the filing deadlines. So in that case, fiscal year filers would need to have this current tax return filed and go off of the 21 over 2020 taxes. The other key thing, and this goes for any tax credit program that you're applying for, in order to receive and be eligible for a credit, all companies have to be tax compliant. That means annual filed tax returns, no balances due. That means if you have payroll, your quarterly reports are done, your year-end payroll reports are done, no balances due. And then if you owe sales tax, they look at that as well. That makes sure that all your sales tax returns are done. Also, if you are a flow-through entity, any owners that have greater than 20% ownership, they also have to be tax compliant. So you don't want to have a company where one of your owners maybe lives in another state and they've never filed a non-resident Pennsylvania tax return. That's going to be a big flag. There will be time for them to correct that and get those returns filed. But it's more difficult to get a hold of owners sometimes that have those types of tax issues, and that could potentially disqualify you from receiving a tax credit. The other thing that was added recently in legislation is that companies that receive tax credits, once they have sold or used them, the state wants them to complete a report on as to what you used the funds for. For most part, KIZ companies are selling their credits. Usually they're using them to cover payroll, maybe purchase some equipment or hire some new summer interns, whatever the case may be. You just have to fill in this report, which is an online system that we would send to you once the sale process is done. Any questions on the Keystone Innovation Zone before we move on to the next program? Or anything I missed, Blake?
Nope, doing a good job so far.
Okay. Well, I'll go move right forward then with the research and development. So the R&D tax program, it really kind of correlates very well with the KIZ program, but it also can be for any company, any size, and any age, in anywhere in Pennsylvania. So the R&D program, it awards tax credits for companies that are creating something new, a new product line, new technology, a new process, but it's also all of those incremental improvements to your products or your processes. There's a couple of things that's called the 4-part test that you have to pass for it to be considered R&D. One of the things is that you have to be at risk, so at financial risk. So if you're getting fully reimbursed on your, with a government contract for every dollar that's going into your R&D and nothing's really truly out of pocket, the government's not also going to award you an R&D tax credit in that case. However, if you are operating on a fixed price contract, as most contract manufacturers or niche manufacturers do, you're at risk at the onset of the program. Of course, you don't want to go over your budget, but if you do, you can't go back and say, we need to renegotiate this so I can get reimbursed. So fixed price contracts versus reimbursed costs is important. The R&D has to be based in hard sciences. So it's not just like marketing surveys or determining which color is preferred for anything like that. It must be based in actual sciences. There has to be uncertainty at the onset of the project, not that they're not confident that you're going to get to your end result, but that there might be different paths you can take, different materials that could be used, a different process that could be put in place. And then there's a process of experimentation, so trial and error, failures rewarded in this case. It's great support that you were doing R&D and actually going through this process of experimentation. There are three main buckets of costs for R&D. The first one, and the one that drives most R&D, is wages. So those are the direct wages of employees who are actively doing the R&D work, whatever the project might be. If it's something to make things more cost effective or time efficient, the direct wages that are going into that, as well as any managers. If a portion of their time is overseeing the R&D work, you can maybe apportion 10% of a manager's time towards R&D. So wages is a big bucket of costs. Anybody that's like a key R&D person, an engineer, software engineer, design person, that 80% or more of their time is spent doing R&D, you can count their entire W-2 wage. The second bucket of cost is direct supplies. So those are supplies that are being used up during your process. So if you are trying different materials, there's wasted materials, things that are being tested and then can't actually go into service in the product line going forward. All of those supplies count. The other thing that kind of counts along with supplies are certain like software and cloud hosting costs. CAD program type things as well that you're purchasing, things that aren't depreciable. If it's on a depreciation schedule, those won't count. It's just things that are expensed. And then the last bucket of costs are subcontractors. So if you are hiring another vendor to do a portion of the R&D, as long as you maintain the IP of the product that is the end result, 65% of what you pay your subcontractors counts towards your R&D bucket. This is kind of just a good tool to use for how you're looking and quantifying these qualified expenses. So how do you break out your wages? You kind of just go through your payroll summary reports for each employee and figure out what they're doing, what they're working on, what type of projects they do if they qualify for R&D, and what percent of their time. Pulling detailed reports for supplies for the same reasons to see what's being used up for which projects. And then also your same thing with your 1099 type people, whether it's a company or an individual. We have developed this research expense organizer, researchexporganizer.com. And that can help you kind of go walk through that 4-part test, see what you're doing, what type of projects you're doing that qualify for R&D, and then help you categorize these expenses into nice spreadsheets to get your numbers. So for R&D, there's actually a federal program for the research and development tax credit. The federal R&D goes right on your filed tax return. It's a form 6765. So you can do that as you're completing your tax return. If it makes sense and you would have a significant return, meaning you would actually benefit right away, you can actually go back and amend up to 3 prior years of taxes to claim an R&D credit if you've never done it before. The federal program is a permanent part of the fiscal code for federal, and it can be used against corporate net income tax. It can flow through to the owners for personal tax. For large businesses, which is an average of more than 10 million in sales, owners cannot use it against their alternative minimum tax, but qualified small businesses can use the credits against their payroll taxes for the first few years that they are in existence, and they can also use it for their owner's alternative minimum tax if they pass it through. The federal R&D, of course, just has to take place somewhere within the United States. So you can't use subcontractors or employees who are located in another country. But if anything activity of those buckets of costs we talked about that are in the US can count. There's no cap with the federal program. So whatever you qualify for, you get. You do have to provide the documentation to back up and support your claim for those for the wages and the expenses, other expenses. There's 2 credit calculations on the 6765. I am not an accountant. One generates, the traditional method generates a larger credit typically, but if you've been in business for a very long time, you have to go back pretty far to establish your base, whereas the simplified method maybe wouldn't give you as big of a credit, but you would be able to find documentation much easier for it. The Pennsylvania tax credit looks at the same types of costs and everything, but it's done a little bit differently. It's not part of the tax return. You actually file for this online via eTides, either you or your accountant or somebody that's assisting you with your R&D application. That application, again, is due December 1st. They're opening it sometime this month. If you are familiar at all with eTides or sales tax or quarterly payroll taxes, you probably have seen where eTides is getting transferred over to MyPath. That is supposed to happen by November for most companies. So we are really encouraging people looking to take advantage of R&D to do so by October 31st so that there aren't any issues with a transfer over to MyPath. We don't believe the state is making any plans to change the R&D application out of eTides, at least for this year. It's opening on eTides, like I said, this month, but just to be safe, we're encouraging October 31st instead of December 1st, if you can. This program used to be at $55 million per year. They actually just raised that cap this fiscal year that just, or this budget cycle. So there is now $60 million each year for this program. 15 million of that is set aside specifically for small businesses. A small business in this case is considered a company with less than $5 million in assets. So when you go to apply, you do need to provide your balance sheet in order to be able to claim the small business side, and then you're only competing with other small businesses. Large companies receive a 10% tax credit of their growth, where small companies get a 20% tax credit. And it's looking at the increases in R&D spending. It's either year over year, or if you've been in the program for a couple of years, you average your base years up to the prior four years. And since this is a Pennsylvania tax credit, of course, it only counts for credits or expenses that are happening within Pennsylvania, whereas the federal one, of course, is anywhere in the state. So if you have vendors or employees that are working outside of Pennsylvania, they wouldn't qualify. But really anywhere in Pennsylvania, working from your home, you don't have to be in any specific zone counts. These credits, again, can be sold, used against corporate net income tax, personal income tax to owners at the Pennsylvania tax levels. And they have a 15-year carry forward. So they do carry forward quite a bit. Any questions on R&D? See how we are on time, about halfway, a little over halfway. Okay. Well, the next program is the Neighborhood Assistance Program. This is one that definitely is working well for your locally. Jari is a participant in this program. The Learning Lamp is on. They've participated in this program. So what this program does is it helps to provide nonprofits who have certain projects going on an incentive to increase their donors. So these types of projects are things that help with job training or workforce development, that help with community services that are needed. It could be blight removal type programs. It could be city beautification projects, putting in benches and trees and stuff on streetscapes, affordable housing things, crime prevention, really all sorts of different types of things that help the neighborhoods. The nonprofit is the one that applies for the program, so they have to complete that online single application. They get the allocation of credits by addressing, where the place, so where their neighborhood is that they're serving, the problem that is happening there that they're trying to solve, what exactly their project is, and then what type of outcomes they're expecting to see. Are they going to be able to increase the number of people served by doing this project? Is it going to reduce blight and encourage people to get back into a building that needed renovated in order to be put back to use? The best way to get a strong application and be successful at this, because it is a competitive program, is to have businesses submit letters of commitment for your project. So it's not that the business is writing a check right off the bat, but they are saying if your project's successful, they'll give $10,000 towards your project. And they're a great supporter of your program. Those support letters are really what the state uses to decide how much each organization is going to get, because without backup support, they need to know that these projects are going to be able to be completed. So the application for this is already passed for this current fiscal year. It was due at the very end of May. The projects now are being reviewed, and the donors have between July 1st and June 30th each fiscal year to give their actual cash donations, or it could be a donation of services or goods as well towards a program. So they must make their donation by the end of the fiscal year, which is June 30th, 2023, in this current application round that's happening. The nonprofit then has an additional 3 months to spend all of the money and implement their program through September 30th of 2023 in this case. The credits themselves can be used by the donor's business, can flow through to the owners. They can also be sold for cash, and they have a 4-year carry forward, so a total of 5 years that they can be used. There's $36 million available total for this program, which sounds like a lot, but there's so many different things that encompass under this program. The first one's a regular neighborhood assistance program of 55%. They have special program priorities that they set out each year, certain things that they really want to highlight in a one-year project to help service an area, things that are of greater need in the state's eyes. That is rewarded a 75% tax credit for the donors. If you have a strategic plan with a larger donor that's going to give, I can't remember if it's $25,000 or $50,000 each year of your 5-year project, they can get a 75% tax credit. And if it goes past year 5 to year 6 or 7, you get 80% for those years for contributing to that. There's a specific program for charitable food programs. So all of the food banks can participate that way and receive donations. And then the last one is the Enterprise Zone Program. This program works a little bit differently. It's for for-profits. The for-profits are awarded these credits for helping these distressed zones that are designated throughout the state by getting a building back to use and having jobs created there. The jobs that are created do need to have family sustaining wages and support for low income residents and communities. Currently, the Johnstown zone has expired, but we are looking into if they are going to go through the process to get a redesignation for the region. But there are other locations. So if you are looking at doing a renovation project for a building and you want to see if where that building is located is within an enterprise zone, please be in touch. The credit is 25% of your expenses. That can be acquisition, all of the hard costs that go into the building, as well as soft costs like architectural and engineering things and fees, permitting fees, and all of that kind of stuff. It again is a competitive program. You have to apply within that window, which is always open in the spring. They usually open it in March or April. And then it's for projects that happen within the state's fiscal year. So if you have a project that you're looking to do next year, please be in touch. We can see if you're within a targeted zone. I don't see any other questions popping up, so I'm going to just keep on going. The next program, the Historic Preservation Tax Credit, is similar to how the Enterprise Zone one works in that it's building project related. So federally, there's been a historic program for a long, long time. If you're going after federal historic tax credits, you're getting a 20% tax credit that's unlimited based on your spending that you're doing within a building. You must follow the Secretary of Interior standards for historic rehabilitation, meaning you can't take an old historic building and change it to a new modern building. You have to maintain the historical integrity of it. That might mean you can't use certain materials that wouldn't have been within the timing, even certain colors that wouldn't have been within the historical significance of that building. The windows might have to be set in a certain dimensions, and the easements and all of that kind of stuff. The building itself has to be either contributing to a historic district or listed individually on the National Historic Registry. All of the qualifying hard renovations and some soft costs do count. Unlike the EZP, the acquisition does not count for this program. And the other thing that you have to do is it must pass the substantial rehab test, meaning that your renovation costs over the period that you're doing your project must exceed the purchase price less depreciation. For federal, it's a 20% tax credit. Like I said, for Pennsylvania, it's a 25% tax credit, similar to the EZP, but they only have $5 million available each year in Pennsylvania. What they do is they split that up among 5 zones in Pennsylvania, so that each zone they try to give $1 million worth of the credits to, so that, you know, central Pennsylvania isn't competing with Philadelphia and Pittsburgh, where a large amount of this activity is happening. But if one zone doesn't have enough applicants, then they'll reallocate that way. But it is very competitive. There's probably $30 to $50 million in applications sometimes given each year. So you can receive up to a $500,000 tax credit, but they usually prorate it down so that they can try to serve more projects. This program I'm not going to really talk about a whole lot, but there are film and video game production credits out there. If you are or know somebody that's in a video game production or developing a game for any sort of platform, definitely reach out. That type of activity is really encouraged at the state. There's $1 million specifically for that type of production, but there's also the R&D program. If you're located within the zone, it can be KIZ eligible as well. For film production, that's a 25% tax credit. So if you do need to shoot a commercial that's going to be national audience, and you're spending some significant dollars and would want information on that, please be in touch. This program, Resource Enhancement and Protection, is an ag-related program. So it is for farmers, landowners who need to implement certain best management practices to help keep the waterways clean and clean up all of our like Chesapeake Bay watersheds and different other watersheds that we're in the streams and the rivers. These applications actually just opened on Monday, August 1st. They open in August each year. It's first come, first served, but it's for the purchase of equipment and all these other BMPs with heavy animal use areas, those types of things. And each ag operation can receive up to $250,000 per operation over a 7-year period. There are ways for businesses to get involved. If this is something that's important to you and you want to be a sponsor of a project, you can help a project get going and get the credits that way. These are the type of projects that qualify. I don't think anybody said they were in ag, so I'm not going to linger on this screen, but if you know somebody that is looking to purchase equipment or some of those things, please let us know. The Educational Improvement Tax Credit Program is probably it is definitely the state's largest program. They just got a big increase. There's now $263 million available in this program for K through 12 scholarships. And I believe that includes a portion that goes to educational improvement organizations, as well as an additional $65 million that's available through the Opportunity Scholarship Program. This program was designed to help businesses be able to redirect their tax dollars to their local private schools, or to help educational improvement organizations that are going into public schools to help further the education programs in Pennsylvania. Tax donors would receive a 75% tax credit if you make a 1-year commitment. Nobody makes a 1-year commitment. If you make a 2-year commitment, you get a 90% tax credit. So all you have to do is say, I'm going to make this same donation 2 years in a row. You get a 90% tax credit for each year. and you get to tell basically where you want your tax dollars to go, whether it's a private school, a pre-K program. There's pre-K scholarships as well that are available. Businesses can apply for these and it can flow through to their owners. An individual business can apply for up to $1.7 million in tax credits if they utilize all of the different programs that are available through this. Most companies or individuals are not doing that large of donations. We work with an organization, the Central Pennsylvania Scholarship Fund, who works with all of the schools all over Pennsylvania. They literally can give a donation anywhere. And they have taken over these special purpose entities that schools have set up. And that way, any individual can become a member by signing a joinder with these SPEs. Their sole purpose is to make education donations. So the minimum donation is a $3,500 donation. You can do that and get that 90% tax credit. 100% of your donation goes to the school of your choice. There's no overhead fees on that. So if you are an organization that wants to be able to receive these funds, you need to apply at the end of the year, so November timeframe, to become an eligible organization to receive these types of donations, and then you can solicit from EITC donor people that are successful in receiving the tax credit allocation. The donors themselves apply for the allocation, but if you're applying through an SPE, you don't have to worry about any of those application processes. You just work with your SPE, sign your joinder, provide your money. Currently, they are still accepting donors who want to be part of the SPEs, and since the state just got a huge increase, there's definitely capacity if you want to join the program and support a local district. You can do your commitment through November. And then as long as you give your check by the end of the year, your donation will be considered a 2022 tax credit. This program here, the Work Opportunity Tax Credit, is actually a federal program. What it looks at are to help certain people who have been unemployed for extended periods of time, also to help veterans, people who have been on certain government aid type services can also qualify, as well as ex-felons who are getting back into the workforce, people who have been incarcerated and are now back in the workforce. What it is a program that encourages the employer to work with and hire, veterans in these people groups in order to help them maintain employment for at least 9 months. The credit goes to the employer. It's anywhere from $2,400 up to $9,600 for hiring a qualified veteran or other targeted group. You obviously can't ask that information when you're hiring, but there are ways and packets of information during a new hire that you can have them fill out to see if they qualify for this credit. And then it's just a matter of filling out a few forms and getting them into the state agency that handles it with the department or with the IRS. It is time sensitive, so you have to do that within the first 28 days of hiring an individual, find out if they qualify. The credit can be used against federal corporate tax returns. If you are a nonprofit or a tax exempt organization, you can still go after this program and use it against your Social Security tax that's due. If you have specific questions about that, Tori from my office is our HR hiring expert, and she knows a lot about that, as well as the ERC, the Earned Retention Credit. That program is available still. You can go back and amend prior years 941s. So this goes back to 2020 during the shutdowns that were going on at that time for companies that maintained their employers or employees. You can get a really huge refundable tax credit for some companies for maintaining those employees during some of the shutdowns and limitations that businesses faced during the start of the pandemic. again, it's been very significant. You have 3 years to amend the returns. So from 2020, you can amend through next year for those quarters, and for the 2021 quarters, if you qualify and had, reductions in your sales numbers, you can apply through 2024. The other thing I just wanted to mention, it seems to be a very hot topic right now, is KIZ Resources. What we do for the most part, of course, is educate and assist with applications on these tax credit programs. But what we're seeing more and more is companies with the need for other HR services. One of the things, like creating policies and handbooks for your employees, helping set up payroll, helping you with your job searches and hiring of employees, as well as just managing and retaining your employees. We can assist with a lot of these things. We've spoken to a lot of companies who haven't updated their handbooks or their employee guides and policies for 15 years. And we are in a very different environment now than we were 15 years ago. So Tori from our office is an HR expert, HR degree, and she can really help manage these types of things. We do these HR audits as well. She's able to do to just help you see where you are within your HR systems and what could be used for improvement. So I just wanted to mention about that. There are many other programs available in the state. If you're into manufacturing and you're looking to increase your payroll by $1 million over a big expansion program, there's a tax credit for that. If you are becoming a new brewery and are purchasing new equipment for your brewery, there's a malt beverage tax credit for that. Lots of different things that are going on throughout the state, and we try to be in the know about what's happening. So anytime that you're doing something different or new, or want to just have a conversation and see if there's something out there that you qualify for, please be in touch. This is a little bit more information about us. Like I said, I'm not an accountant, but we came from accountants. My boss is still an accountant and practices tax work. So we have a really good knowledge of how the tax system works and how the Department of Revenue looks at these types of programs. And we know everybody at the state to kind of help make all these processes easy for you, to assist with the application process as well as the sale process to get you cash at the end of the day. We have secure systems, and we operate on a success-based fee. So we always want to make sure we're taking you down a path that you're going to be successful at receiving a tax credit, and being able to grow your business. So I think I've finished with a few minutes left for questions. So hopefully we have a few questions out there.
Yeah, if anybody has any questions to ask, please go ahead and unmute yourself. You can ask them now.
I was curious what the concert tax credit is.
So the concert tax credit, I don't know if it's going to let me scroll back up. The concert tax credit is designed for anybody that is doing a concert. When you can come into the state and get like your staging and stuff area. If you commit to doing a couple of smaller Pennsylvania venues, you can receive a tax credit for based on what you spent. There's a group in Lidditz called Rock Lidditz that does staging for huge shows as well as for other small concert musicians going out on tour. What this program does is it helps you get get tax credit back based off of your spending for these types of tours, as long as you commit to going to some of the smaller venues within Pennsylvania during your tour.
So it's similar to the film credits, I guess.
It is a little bit similar to the film credits for the entertainment industry. Right. Yep.
So it's not for organizations that are organizations already established and have their own building and stuff. This is for things coming in.
Well, that one specifically is for the tour coming in.
Okay.
If you are like a musician or taking a show on the road per se, and are doing that at your venue, but also, spending dollars in other places, I'd have to look and see specifically the rules on that.
Okay.
for the film credit, you can be an established business here and, doing a production,
Oh,
TV, movie, you can be an established business here. They're really trying to build up the Pennsylvania film industry. That credit got a big increase actually this year. I don't think I had even updated it on the slide. There's now $100 million available in credits for film productions.
Pennsylvania wants to become Georgia, huh?
Yeah, exactly. They're trying to compete with Georgia and Louisiana and California, of course. But yeah, it's established business that is absolutely, PA based. They actually really, I think there's even a boost. It's 25% of your production costs, but 65% of it has to be done in Pennsylvania at least. If you are like a post-production facility or you're using a Pennsylvania post-production facility as well, I think it gets boosted to 30% of that portion of the expenses kind of thing. So
Okay, thank you.
yeah, absolutely. Any other questions?
Hi, I have a question. I'm sorry. Do you want to go?
No, go right ahead.
Okay. Regarding the EITC, when you were mentioning the SPE donors from employees of the nonprofit, it says, and I was kind of typing to kind of remember all of this. It says, can you explain that? Because I'm confused on the part that you said. So it's like, because we do have an employee giving program.
Yeah, let me get back to that slide.
Okay.
This is something. Oh, wait, it made me stop my screen share. Sorry. Try again. There we go. So Randy Tarpey and Tammy Clark are the two people who run this program in Pennsylvania. They're very, very passionate about it. So they know all of the ins and outs. So what they have said was there was some confusion as to what type of people can still participate in this type of program. So there was some, I guess, conflict that employees of nonprofits that only have stock income, instead of, because if maybe they don't have a large income that's creating a PA tax liability from their nonprofit job, but they have income from other sources or income from stocks, you can still participate in this program because you have a PA taxable liability that would be covered by the credit. You don't want to participate in the program if you don't have the liability to cover it. There's no carry forward in this per each year. And that's why they, it's a use it or lose it kind of program. There's no transfer, no carry forward. We just do a lot of volunteer work on this. But yes, if you have, if you're employed by a nonprofit, but also have income from other sources, you can still participate in this program.
Oh, you need income from other sources. Okay.
Yes.
Okay.
Yeah. If you are just employed and getting, and I think the reason for that is for the nonprofit educational improvement organization or whatever, you're receiving donors that might be funding your salary.
Right.
And then, yeah, that's why they have that.
The reasons. Okay. That makes more sense. Thank you.
Mm-hmm.
Could I just have you expand on the KIZ program, the targeted industry and the IP component?
Yeah. So the industries, they're pretty broad, especially the business services ones. That can be any sort of information technology activity that's happening. The IP portion is really tricky sounding because again, it doesn't have to be something that's a patent, but it just has to be something that is unique to you. So what they're looking for is they don't want companies coming in that are just a retailer or a wholesaler. You are selling office suite software off the shelf. They want you to have created something that's improving it for your customers, so that piece that you have done that's improving a product or a process that you're putting out to your customers is what kind of qualifies there. Do you have a specific type of industry that you're wondering if it would qualify, or does that kind of help narrow it down a little bit?
Does food services fit in any of those categories? Restaurant type situations?
Not so much food services in that just like a restaurant that is creating and certain recipes and just serving right at the restaurant. But if you are doing more on a manufacturing side, so food services where you've developed something like a granola bar or something, so I don't know, just throwing something out there that you're packaging and putting out as a manufacturing, and you've created and developed this process or this product that's unique that you're serving that way. As well as same thing with breweries that have developed their beer recipes or their brewing systems and processes, they can qualify as well. But I haven't seen, and Blake, correct me if you think there's I'm missing something, but I haven't seen just like a restaurant that has qualified.
No, and I've asked at the state level a couple times, and they say pretty much blanket no for restaurants, unless, like you said, they're doing food manufacturing.
I understand. Thank you.
Yeah. It's unfortunate because there are definitely chefs who are really creative, who are doing things that are their own 100%, and putting things out that are definitely unique. But yeah, that wasn't a type of service industry that they were looking at. Any other questions?
This has been very informative. Thank you very much.
Thank you. I felt like I talked for a really long time there without questions. So I was hoping that it was,
we were all taking
relevant.
it in.
It's a lot of information all at once within an hour there. So really, I appreciate all the feedback and questions.
Well, that being said, if there are no other questions right now, we will go ahead and wrap this up. If you think of other questions later, feel free to reach out to Lindsey or myself, and I can pass the email along to Lindsey. This session has been recorded. I will have it put on our blog on the JARI website, either later this afternoon or first thing tomorrow morning. So if you need to reference back to it, it will be there. You just go to jari.com, click on the Expertise Matters section, and it will be listed under our blog. So that being said, thank you, Lindsey, for presenting the information today, and thank you to everybody else that joined us, and hopefully everybody got something out of it that will be useful to them either now or in the future.
Great. Thank you so much for having me.
All right. Thanks, guys.
Bye.
Bye.